Hey, you guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday. We're going to go over what's going on in the markets and the charts. But first, remember, none of this is tax, legal, financial, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. And if you want to see more content like this, make sure you like and subscribe to this channel. So like this video, subscribe to the channel, comment below. What'd you like best? What would you like to see more of so that you can see more content like this and help increase your knowledge as quickly as possible? So let's dive right in. All right, first we're going to start with the Bitcoin TABI model. So this is the TABI model, still yellow right now. We're sitting right at 105,360. Now let's talk real quick about the macro this week. We've had a lot of craziness in the markets, right? I mean, Bitcoin was just 75,000 about a month ago, or 5 weeks ago, and in 5 weeks has gone from 74, 75,000 all the way to 106, almost touched 107 overnight, right? So things are on fire right now in not only the Bitcoin market, but in the general markets as well. Everybody was calling for a recession. People were worried. The tariffs, everybody was stressed about those. And what we saw was one of the fastest and biggest recoveries in the history of not only Bitcoin, but the S&P 500 and all of the other markets combined. So we're back up positive for the year right now across all major indices. And that's as a result of some of the tariff sanctions being lowered across the markets. That looks like deals are going to be made. Earnings are starting to be projected to be pretty good for some of the major companies. So it doesn't look as dire as it looked just a little while ago. So that stresses the importance of running into the burning building when nobody else will, right? And sometimes you have to go counter to what the rest of the world is doing. So that's just a little aside. But going back to the chart here, we see that the Meyer multiple has actually come down and is still in that I think it's like 1.1, 1.2 range right now. Also, if you look down at the bottom, the MVRV score, slightly up, but nothing spectacular. Not in like these high levels that like 2 or higher for the Meyer multiple, 2.4 to be exact, or MVRV score getting up that high. We're not worried about any of that yet. Right now, looks like things are on the up and up. Bitcoin's going to need to break through this resistance that we have right around 106,000. So here on the daily chart, you see that there is that resistance level at around 106. We did spend a slight amount of time above it. We did hit an all-time high of 109,358 on Coinbase. So we're within $3,000 of that right now at this 106 level, right? So we're literally right on the cusp of breaking out and going into what they call price discovery mode. We are in this band of resistance that extends down to about 102,000, 101,750 to be exact, and up to 106,000. We broke right through this 95, 96 zone like a hot knife through butter, as they would say. Look at how much we battled with that area back here at the end of in November, December, January, February, and even into the end of February. We were battling with that $96,000 level. Cut right through it after just a few taps right here, and now we're getting close to making new all-time highs. You'll notice that the money supply has been on a steady increase since Inauguration Day, we'll say. That's when everything topped out. That's when Bitcoin hit a new all-time high, and the money supply has just been climbing ever since. RSI is overheated right now, as is the mean reversion, right? We're about 1 standard deviation above the mean on mean reversion. RSI is close to 70 right now. MACD is showing a bit of a crossover, and on the daily, we're starting to see some little sell flags start to show up. Wouldn't be surprised to see things consolidate here for a little while before breaking out. On the 4-hour chart of Bitcoin, you can see that a little bit more clearly. This is the linear regression channel that we've been in since the trend reversed on April 7th. What do I mean by trend? We were no longer making lower lows and lower highs. We started making higher highs and higher lows, right? So that's what we mean by a trend reversal. You can see it has been tight in this linear regression channel for the last 5, almost 6 weeks now, for about the last 6 weeks. Super tight in this linear regression channel. The Pearson's coefficient is close to 97. It's 96.8. That's telling you it's a really tight fit to this channel that you see here. We did tag the bottom of it just recently, yesterday, Monday, and right now we are almost just running into resistance in the midline of this channel, which is congruent with that 106 price level. So a lot of things telling us we're gonna go sideways just a little bit here before breaking out to the upside. Here are your moving averages all converging together. You have your 100-day moving average down around 90,500, your 50-day moving average around 92,250, and your 200-day moving average. Get this, guys. The 200-day moving average on Bitcoin is $93,000. I think back to when it was $15,600 back at the end of 2022 after the FTX implosion. And to think of how far we've come now, that the 200-day moving average back then was in the 20s and 30s, and now it's thousands, and now it's up at $93,000. That's pretty remarkable. Support to the downside immediately is right around 102, 101, 880. So call that 102 down here. You can see where we've tapped on that a few times and bounced right back off of it. Resistance to the upside immediately is 106, and then the all-time high, which is 109. Mean reversion on the 4-hour is pretty much neutral. So is RSI, and so is MACD. Solana Bitcoin chart. So this is on the daily. Solana Bitcoin, we do have an inverse head and shoulders, but we did not break out. We started to break out and then immediately dropped back below. What is this telling us? Bitcoin dominance is real, guys. This Bitcoin dominance is incredible how strong it is. I think it's up in like the 65 range or something like that, 65% range, which is absolutely insane. But every time Solana started to move against Bitcoin, Bitcoin comes roaring back, and that's what causes this to drop back down to the 50-day moving average. Notice that has really been our line in the sand, this green line that you see going across right here. That 50-day moving average, we've bounced on it or closed on it or at it pretty much every day in some way, shape, or form, with this little exception right here, this little bump right here. Outside of that, we've been on the 50-day moving average for the last month and a half. It's pretty crazy to see. Resistance to the upside is around 0.0018. I'll just round that off, 0.0018. Support to the downside, 0.0015, and we are in a relatively tight range right now. You can see that also on this linear regression channel. 200-day moving average way up here at 0.00194 almost. And the target for the inverse head and shoulders pattern, if it plays out, is 0.002. That means for every one Solana, you would get 0.002 Bitcoin. Moving on to the Solana daily chart. This one looks a little bit crazier, a little bit busier. I kind of wanted to start here so you could see what the volume profile looks like. A lot of people loaded the boat right here at around 150. That's the point of control, 145, 150. That's the point of control. That is our current support zone. So dropping below, let's say, around 145, 150 right now, highly unlikely, not impossible, but unlikely. That's our strong support level. We are in a resistance zone right now, and that resistance zone could be marked right now by this 200-day moving average. You notice how we came up, we closed above it, and then immediately for a 4-hour candle, then immediately rejected off of it. Again, the linear regression channel since the 7th of April is super tight to the upside. If we look at the longer term one, the downtrend that we've kind of been in, we want to break above this red line that you see sloping downwards right here, this sloping red line. What that does is we need to get up and make a higher high. We don't want to keep making lower highs and lower lows and continue down in this downwards pattern. Do I think that's likely? Highly unlikely right now because of given the macro events. But on the daily, we are overheated. We did just come off of an RSI over 70, close to 80 on the daily chart. If we move over onto the Solana 4-hour chart, you can see that linear regression channel even tighter on the 4-hour chart, super tight. You see where we rejected off the 200-day moving average. We tried to break it here on the 10th. We tried to break it here on the 12th. We did break it on the 13th and immediately fell back below it on the 14th last week. So right after last week's TA Tuesday, boom, pulled back again. And we tagged the bottom of the linear regression channel. So right now, Solana's taking a breather. It did go up much faster than Bitcoin over the last 6 weeks, right? So it went up much faster. Now it's starting to slow down and Bitcoin's catching up. We're actually mean reverted to the downside on the 4-hour chart. Slightly, but enough to say that, this is a place to perhaps add Solana if you felt like you were light on Solana and you were wanting to get some before any big run to the upside. And remember, this asset was 295 just a few months ago. RSI right here at neutral on the chart. Hey guys, just wanted to give you a quick tour of my website. I know a lot of you are asking, where are these courses located? So if you head on over to gdinerocoaching.com, you'll see here, this is the homepage that you would land on where it talks about learning to trade stocks, options, and crypto. There's a welcome video in there. And then if you're not quite ready to purchase a course, there are some free trainings that I do. It's a little bit limited, but if you want to learn TradingView and technical analysis, here's where the course is. These are the things that you'll learn. You'll learn how to navigate TradingView. You'll learn the free built-in TradingView indicators, layouts, templates, some of my favorites, the free and paid indicators by Invest Answers. Those are sold separately by Invest Answers. Basic, intermediate, and advanced technical analysis. You get 60 days access to the course. There's a frequently asked questions section. There's quizzes at the end of every single lesson. And there's a private link there to be able to access and ask me questions along the way where I'll either answer those via email or via video responses. So you get all those for $279 with a credit card or $250 if you pay with cryptocurrency. This is also where you'll find my Understanding Options class. And in the Understanding Options course, you'll learn to trade options like a pro, buying long calls, leaps, selling calls, hedging for income. I mean, you name it, all the way up to more advanced strategies like synthetic long, synthetic shorts, and spreads. If all that sounds like Greek to you, we will teach you the Greeks along the way as well. And it's the same deal. You get a 60-day access to the course, frequently asked questions, quizzes, private link to ask me questions. And that one is $549 with a credit card or $500 with Bitcoin and Solana. So look forward to helping you out. And let's go ahead and jump back into the video. On Tesla, if you look at the Tesla chart right here on the daily chart, again, you can see we are right here at a zone of volume on the visible range volume profile. That's the VRVP down the right-hand side. You can also see where that next zone of resistance is going to be. It's basically extending from 400 up to 420, 425. That one's for you, Elon, right? The 420. You'll see that on the daily chart, we are mean reverted to the upside, about 1 standard deviation to the upside right now. RSI was just above 70. So that means that Tesla made a really strong move to the upside. Not surprising. We did break out of this downward sloping linear regression channel. You notice that we've had 1, 2, 3, 4, 5 closes above this downward sloping red line right here. This downward sloping red line right here. So if we drew it here, all 5 of these closes so far where we are right now have been above or outside that downward sloping linear regression channel. That's a good sign that perhaps this trend has indeed reversed and we need to be following this shorter term linear regression channel, making a series of higher highs and higher lows. That's what I anticipate will happen. On the 4-hour chart, here's that short-term linear regression channel. We're holding really tight to that. We tagged the bottom of it back here on the 21st of April. Kind of crazy because it was April 21st and 22nd last year when we were able to buy Tesla at around 130 to 140. This year, it was at 225 or so when we were on the same date when we were getting an incredible buying opportunity for it. I know I don't see buy flags and all those other things. You've got to learn how to read the technical analysis charts in order to be able to see where these opportunities lie. What that was a double bottom. In fact, it was a triple bottom. 1, 2, 3 times we went down and tagged this gray line right here. That's telling you that's it. We're not going any lower than that, and this thing's going to move to the upside. There was maybe a 10 or 15% chance of going lower. I even talked about that in my videos. I said we could go lower, but the likely move is to the upside. We battled with the 200-day moving average for a little while here, and right now we're tagging the top of this linear regression channel and up in this next zone of resistance. What I mean by zone, this red box that you see that I've put up here, that red box is a zone. We're battling with the 50% Fibonacci level right here at 350. That's proving to be pretty significant resistance right now. Not surprising. We did also gap up. You can kind of see it right here. Notice there's no volume that exchanged hands right in where I just drew that pink horizontal line. That tells you that that gap could fill. They usually fill, not always. So what would that require? It would require us to drop back down to around 295 to 300. Wouldn't be surprising because that would be a perfect retest then of the 200-day moving average. Notice when we broke above it, we never came back down and retested it. That's typical to come back and retest the 200-day moving average. If that were to happen, that's your buying opportunity on Tesla. Everybody's been waiting and waiting and waiting to buy Tesla. That is your buying opportunity, that 200-day moving average, in my opinion. 50-day moving average down here at 270. I don't see us going back down that low anytime soon. We'll get caught by this zone right here that we spent a long time in, 285 to 300. So that's the kill zone. Resistance right now, strong resistance up here at around 360, 363. So we're going to battle around in this zone for a little bit. Of course, all bets are off. If Austin, the what's it called, Robotaxi event comes in and it's through the roof with Robotaxi in Austin later on in June, then all bets are off and this thing could go to the moon. But I don't see it taking off that fast right now. There's just a lot of zones of resistance to get through in the meantime. And I don't think the market's going to fully understand that Austin event for at least a couple of months based on some of the press that I've been seeing. Of course, the press is not always right. They're usually wrong. Now we're going to move over to MicroStrategy. So if we look at MicroStrategy, on the MicroStrategy daily chart, you can see big area of volume right here, centered at around 395, going up to about 421 and down to 374. So that is the zone that we're in right now. You'll see that we gapped up right here and filled the gap. I'll show you that on the next slide a little bit. We are holding tight to this linear regression channel, going up and to the right now and going right up against this resistance at 430, 435 on MicroStrategy. That's the 78.6% fib level. Not surprising that we're running into resistance there. Mean reverted to the upside right now. Sell signal on the daily chart, which is unusual to get those. But look, we got one back here in November and then skyrocketed afterwards. So those are sometimes accurate, not always accurate. And then this is the MNAV score down here. NAV right now is just slightly under 2. Just slightly under 2 for MicroStrategy. What is that? That's the premium to the amount of Bitcoin that they have. So basically, the market cap right now of MicroStrategy is 2 to 1 the value of their Bitcoin holdings. That's a simplified version of what the MNAV is. Here we are on the 4-hour chart. On the 4-hour chart, perfect retest back here of the 200-day moving average about 6 weeks ago. Since then, been skyrocketing up and to the right. And what you'll notice is this little yellow box right here, and I'm going to zoom in on it. That was the gap up from the close on Wednesday to the open on Thursday. We filled that gap perfectly yesterday. We started to fill it back last week, Thursday and Friday. Monday, notice we came down, we traded right through that zone and right back up out of it. So not surprising to see that. I called that last week that we had a gap up. But of course I didn't, called that last week that we had a gap up and thought that we were going to fill it back here near the beginning of last week. We did not. So Tuesday would have been right around here where I said there's a gap. We may go down and fill it right away. We didn't. We took one more run up here at 425 and then pulled back, filled the gap. We are neutral on the mean reversion. Neutral right now here on mean reversion. RSI is pretty much in a neutral zone, just a little bit above 50. MACD right here at neutral. Everything is like, okay, sprung to the upside. Sailor hit the ATM, pulled back. Things are chilling right now. Waiting on that next big move for Bitcoin. When the next big move for Bitcoin comes, usually MicroStrategy sniffs it out a little bit ahead of time and starts to move first. Our next area of resistance you can see is up here. It extends to 450, goes down to 425. So 425 to 450 will present the next area where we go up into and consolidate like we did in this green zone right here back a few weeks ago, right after earnings, right? See how we traded sideways? We went up into it and then traded sideways in it, then bang, went above it and used it as support going back halfway into that support zone. And now we would make our way back up towards this resistance, take another shot at the current resistance zone. Nvidia 4-hour chart. I haven't been doing the daily there. The 4-hour chart, you'll notice we've been on a screamer since Monday, April 7th. Monday, April 7th, you could have bought Nvidia for $86. You could have sold Nvidia back here on last Wednesday, so a week ago, roughly tomorrow, you could have sold Nvidia for $136.60. So that's pretty crazy, or $136.89 over here on Friday. So last week, you could have sold Nvidia for about a $50 a share profit, roughly $50 a share profit in a matter of 5-6 weeks time. So it's crazy how fast this thing has rebounded now that things are looking better with the trade situation with China, somewhat of a deal reached. We are significantly mean reverted to the upside. Nvidia is taking a breather right here. It's near the top of the linear regression channel. It's banging up against the 78.6% fib level, which is right here at 139. So there is considerable resistance right here between 137 and 141, let's say. So right around 139, 140. And you notice that we sprung up into this green box right here and have now just basically traded sideways with just a quick retest of the previous support zone. These support zones are a lot tighter on Nvidia. It does tend to trade relatively tight to those. We did not go back and retest the 200-day moving average. That is a possibility. That's down at 125. So I would say support to the downside, 125 to 128. Anything down there is a steal right now. Going all the way back down to the 50 at 113 would be a back the truck up moment on that. Last but not least is our MicroStrategy Tesla pair. Guys, the video that I did on the MicroStrategy Tesla pair, I'll put it up here again so that you all have it. That has been one of my most widely viewed videos ever. Everybody and their mother wants to learn how to pair trade. And it's really simple. People are overcomplicating it. They're worried about what their cost basis is on one asset or the other, and yet they're trading these things in a tax-free or in a Roth IRA, in a traditional IRA, or in some type of tax-free vehicle. Some are doing it in a taxable. There, you do have to take into account your cost basis a bit, just so you know how much you're paying in taxes. Are you selling it for more than what you bought it for? And did you hold the asset for a year or longer, at least here in the United States, right? But for the most part, what you're most worried about is the ratios. And so you got to remember, last week, there's Tuesday last week. I said we're right in the middle of this zone right now. We had just come off of selling opportunities right here. Here's a clear-cut sell. That to me is a second chance if you didn't sell back over here, because it's at the same ratio. Anywhere from 1.45 to 1.5. That means 1.45 to 1.5 Tesla shares for every one MicroStrategy share that you sell. Bang, we came straight down here right out of the linear regression channel, bounced on the 50-day the 50% Fibonacci level just about perfectly. Printed a perfect green dot down here on the mean reversion at almost 2 standard deviations below the mean. It's 1.94 to be exact. Buy signal, even on the confluence indicator. And then the trend started to flip. So everything right here is telling you great opportunity to go from Tesla back into MicroStrategy. With how much? I never do my entire bag. I might do 100% of what I've allocated to that strategy, but that strategy might only incorporate 10 or 20 or 30 or 40% of my overall holdings in that particular account. That way I always have some Tesla and I always have some MicroStrategy in case this thing explodes to the upside. But my opinion, that was a clear-cut swap back again. Let's say you didn't even get the top here and you only got 1.45. You could have gotten let's say for every 100 MicroStrategy, you could have gotten 145 Tesla, and then down here, gone back and wound up with about 120 to 125 MicroStrategy. Increasing your MicroStrategy bag by 25% in a matter of a couple of weeks. That's what pair trading is all about. All right, guys, I hope you had found mad value in this. If you did, make sure you book a course with me. Book that TradingView and technical analysis course that we talked about. That'll help you be able to read the charts on your own so you don't have to rely on others to do it for you. Also, I teach an understanding options class. If you want to learn how to use options in your portfolio to either hedge your portfolio, perhaps to plan exits on your particular assets, or even to generate a weekly or monthly income, you can do so, and I can teach you how using options. So that's my understanding options class. I also do individual appointments. Again, please like this video, subscribe to the channel so that we can grow the channel and more people can see videos like this. Comment below what you like best, and remember, this is G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in, guys, and we'll see you next time.